Commodities, Wars, and Elections in 2022. As important as technology and drill results are, jurisdictional risk is one of the most important factors to watch in your stock portfolio. I have discussed this in detail with the positive swap line versus negative swap line nations concept. Few analysts truly account for this in their models. Why? Most of the time, they are trying to please the company and the institutional salesman with favorable write-ups rather than buying stock personally. For example, do you think a North American publicly listed company with an asset in Russia or Turkey should have the same discount rate as an asset in Nevada? Well, believe it or not, that is the case with almost every published analyst from the big banks applying the same 5% discount rate for a project in Russia or Turkey as an equivalent project in Nevada. Flat out, that's just insane. You don't need an advanced degree in math to know that that's just wrong analysis. Having traveled around the globe, worn bulletproof vests and rode in armored cars, and most importantly, invest my own money at the same time and price as my research, I can assure you I take jurisdictional risk more seriously than any other analyst or banker. I know it sounds sexy and adventuresome to go to some exotic place to explore for oil, gold, or other commodities like copper and uranium. It makes for fantastic marketing to sell newsletters. But where your asset is, your money is. And the world is changing in warp speed before our eyes. The war machine is firing up. The American news is flooded with one of its go-to news reports: Russia's military movements. Because of my 2014 New York Times bestseller called The Colder War, I've had a flood of media requests to comment on what will happen next. I've on purpose stayed quiet. Here's my public response for the first time. I believe Russia is going to continue its campaign with the intent of exposing the weaknesses in the economic, political, and military links between the European Union and the US, but to also show the EU and the US and the rest of the world Russia's place in the hierarchy of a balanced world. It is in China's best interest to support Russia in this endeavor, and President Putin has the political power within Russia to execute on this plan. Fact, fiction, and tax revenue. Investors have long looked for sexy places that could offer big returns. The fact is, in the last 20 years in the business, the biggest scores were not in those exotic high-risk jurisdictions, but in positive swap line nations. The latest gold mine in Zimbabwe or the most incredible mine in Russia. There's just a false contrarian narrative out there that preaches high-risk jurisdictions is where you need to go to make high returns. I call total bullshit on that. Fact. Mining projects generate enormous amounts of tax and royalty revenue for the nations while employing hundreds or even thousands of residents. These are highly sought after, high-paying jobs in comparison to most other forms of employment within the communities. In many regions, these large mineral or hydrocarbon endowments are fiercely fought over between companies and governments. That rarely makes the newspaper. In many places around the world, governments would rather raise taxes and even nationalize the mine, seize control of it, and then run it poorly, versus assume a minority stake and let a world-class operator run the mine. 2022 Election Watch. In 2021, there were numerous key elections which affected and continued to affect mining operations in Chile, Peru, Zambia, and Ecuador. In Chile and Peru, we have seen major fights between governments, unions, and the mining companies. Chile and Peru are two of the world's largest copper producers. These governments want to increase their takes of revenue from mining either through increased direct ownership or through higher taxes and royalties, and they will. Similar situations have arisen in Zambia. Higher royalties and government ownership reduce the upside of the shareholders of the company operating the mine. That means lower cash and lower valuations for shareholders. So I have highlighted these nations many times as higher risk jurisdictions. Ecuador is attempting to move in the other direction, recognizing the wealth creation of mining activities and encouraging foreign investment. In 2022, there are a handful of notable elections which I will keep a close eye on. Australia, Philippines, Colombia, Papua New Guinea, Angola, and Brazil all have elections in 2022. pay close attention if your investments are within these jurisdictions. The Australian election is important because the nation is a very large producer of precious and base metals along with uranium and natural gas. All these industries are carbon intensive given the push towards decarbonization. Any new carbon tax legislation on emission caps or restrictions could pose higher costs to the miners. Mining in the Philippines continues to be challenging under the current government. In the past, the government imposed restrictions on any new mines. Those have been recently lifted, but one must be very cautious. Open pit mines were banned, but at the end of December, that also is redacted. I expect the existing establishment to remain in power, which makes the nation a risky and will continue to be a negative swap line nation. Colombia, Papua New Guinea, and Angola are all negative swap line nations and host large mineral endowments. Historically, all three nations have had positive environments for extractive industries, but none are positive swap lines, or regions which I deem to be particularly safe compared to other mining-friendly jurisdictions, like certain states in the US and certain provinces in Canada like Quebec. The Brazil Watch. Brazil is a very important mining nation, and it has a US dollar swap line, making it a positive swap line nation. Brazil is rich in iron ore, gold, copper, as well as oil. The nation was rocked by COVID-19, and citizens are unhappy with the government. Current Brazilian President Bolsonaro has faced all sorts of issues within his cabinet and across the economy. The far-right leader is now hospitalized due to complications from a stabbing in 2018. The nation's previous president, from 2003 to 2010, known as Lula, has made a strong comeback in the polls and has now overtaken Bolsonaro by a wide margin. A Lula win would be beneficial for the Brazilian economy, as many global leaders dislike Bolsonaro. If you forced me to pick today which way Brazil will go, I would say Lula takes the election. This is something I am looking into further, as some of our KRO portfolio companies have assets and producing mines in Brazil. Lula, during his last tenure, was very pro-mining. I will continue to watch the polling for all these elections closely, as they have major implications for our investments. It's one of the many hundreds of items our team is watching and factors in due diligence. If you don't have the time, consider learning more about the KRO, which is known as the Katusa's Resource Opportunities. And you can lean on us to cut to the chase and watch me put my own money on the line in every opportunity we write about. Stay safe. Subscribe to the KRO, which is the Katusa Resource Opportunities, to find out exactly what prices I'm buying at and what price I sell at before the trade occurs. And you get to sell before I do. If you want to give your portfolio an edge, consider becoming a member and giving it a try for yourself.